Hey, David's iMortgage Guy here, and welcome back to the channel. Are you interested in getting out of the city, away from high prices and nosy neighbors? Do you dream of not only owning your own home, but all the land it's on as well? As a mortgage loan officer for over 17 years, I've seen how stretching out and getting some space can really have a positive impact on your life, mentally and financially. Today, we're deep diving into the world of USDA loans, your key to unlocking affordable housing in rural areas. Whether you're a first-time homebuyer or looking to upgrade your rural living situation, this video will equip you with all of the knowledge you need to navigate the USDA loan process and turn your dream home into a reality. So let's get started. What is a USDA loan? A USDA loan is a loan that's actually backed by the government, and they are actually good for rural living because they offer exclusive financing options for borrowers purchasing homes in rural areas where other loan options may be limited. The USDA, which is the United States Department of Agriculture, provides these loans to encourage rural development and home ownership. So, if you're ready to get out of the city apartment, looking to move or upgrade in your qualifying area, or just looking for a more affordable path to home ownership, stick around because by the end of this video, you're going to be fully prepared to take those first steps to securing your USDA loan. So if you have an area in mind or want to discover your options, there will be a link in the description to the USDA eligibility maps to see the qualifying areas across the country, and you're actually going to be surprised as to what you'll find. I'm going to tell you about a customer, Nick, that I helped. Nick is a young police academy graduate starting his career. For a long time, he actually dreamed of building a new construction cottage in Cape Charles, Virginia. Now, Cape Charles is really perfect for raising a family and connecting with nature without sacrificing the social life that he'd built in the Virginia Beach area. But with limited savings, a traditional down payment was totally out of reach. We sat down, looked over all of his options, and discovered Cape Charles actually qualified for a USDA loan, and he would actually have a lower tax rate compared to other counties that are in the city. So he wouldn't be able to build his new home because of the cost of building, but with the USDA loan and the backing of an experienced loan officer, he was able to purchase a newer modular home instead of building his cottage. He was able to keep some of the customization he wanted without waiting for that build of that new construction, and he did all of this with no money down and a much more affordable payment due to the taxes and insurance being lower in his new hometown. Now, a few years later, he's been able to save up a lot more money than he had before, and we're in the process of setting him up for a new custom home build, once again in Cape Charles for the actual dream home that he's envisioned. So, if you don't have an area in mind, let's go over how to find the rural house that you want. The first thing that we want to do is we want to partner with a knowledgeable agent, okay? Find a real estate agent that is familiar with USDA loans and the rural market. They can certainly guide you through eligible properties, navigate specific requirements, and connect you with resources tailored to rural living. Now, consider customizing your home and buying your land. USDA does offer a very good option to do a one-time closed construction loan. So for no money down, you can purchase the land and build at the same time, which is honestly priceless. There are tons of online real estate platforms with USDA loan filters or rural loan filters to kind of streamline your search to look for eligible properties. Many of these platforms do allow you to search location, price range, and property features. And above all, consider your needs and lifestyle. Prioritize your must-have features in a rural home. Do you need ample space for a growing family? Are you looking for a property with acreage for hobbies or agriculture? Understanding your needs will help narrow down your search and help the real estate agent while they're setting up that search. So it's really important to schedule that consultation with the real estate agent that specializes in rural properties and USDA loans. Now that we've found the area that we want to be in, when you are interviewing your real estate agent to see if they're experienced with finding rural properties, here are some topics and questions you should consider. The first thing is the unique consideration of rural properties. Like, you have to set up the search properly. Land size, room count, any exterior structures, bathroom counts, potentials for renovations, and etc. Now, when researching your real estate agent's experience, always ask for client testimonials or someone who you can talk to that the agent has actually helped in a similar situation that has actually closed on their home. So it's really important to ensure that your realtor and your lender are working hand in hand. They will ensure that the guidelines are set for, confirming the taxes on the properties that you're interested in, and if it's a new construction, calculating the tax rates for you, and knowing how much to ask for in closing costs and negotiations, as with the rate fluctuations that are happening daily, and this can happen multiple times a day, you need to know what your initial contribution is, and it has to be communicated from the lender to the realtor so that they're asking for the right amount of closing cost. Now, finding an eligible area that works for your lifestyle is great, but that's not all you need. There are a few other requirements that you have to meet. Now, the one thing to really keep in mind for USDA loans is USDA actually prioritizes affordable housing for moderate income families. So there are specific income limits based on the household size and location, and you can actually find those limits on the USDA website. However, we will delve deeper into calculating eligibility later, but first, let's be clear. The property you purchase with the USDA loan must be your primary residence. Vacation homes, second homes, or investment properties are not eligible. While USDA loans offer more flexibility than conventional loans, maintaining a good credit history is still important. Aim for that credit score above 640 for a smoother application process. However, USDA loans can sometimes be approved with credit scores as low as 580, depending on other factors as well. The next thing to really consider when you're looking at your credit score is that it is really important to utilize your annual benefit to check your credit for inaccurate credit, payment histories, or other credit factors that are affecting your credit score. So request a free credit report from annualcreditreport.com and address any of those outstanding issues on their website with their dispute tools. This is not only going to be able to help you improve your credit score before applying for that USDA loan, but this can actually significantly increase your chances for approval. So if it is a major issue, you can always give us a call and we can go over your credit score and credit report. However, if it is really major, then we can recommend a credit repair company for some challenging files. It is really important to note that there are actually two different USDA loan programs. The first one's going to be the Guaranteed Loan Program, which is GLP. This is the most common USDA loan. The government guarantees the loan to a private lender like ourselves, making it easier to qualify. So it is ideal for single-family homes in eligible rural areas. The other option is the Direct Loan Program, which is DL. The USDA on this will directly lend its money to eligible borrowers in low-income and very low-income areas. This program can be a very good option for those with lower income or facing challenges to qualify for that GLP loan with the private lenders. So no matter which version of USDA loan works best for you, the benefits really speak for themselves. So let's go through them just in case you weren't sure a USDA loan is right for you. The number one reason I recommend USDA loan is for their low or no down payment options, because the minimum requirement is 0%. This is truly a game changer, especially for first-time home buyers who may not have that large down payment saved. USDA loans typically allow for 0% down payment, and in most cases, significantly reducing the upfront financial burden of buying the home. This can free up monies that you have saved up for closing costs, buying down the interest rate, moving expenses, or even renovations. The next reason is the competitive interest rates. USDA loans generally offer lower interest rates compared to conventional loans, and this translates to significant savings over the life of the loan for your mortgage. So this in turn puts more money back into your pocket every single month. USDA loans also have a relaxed credit score requirement and allows for a higher debt-to-income ratio compared to your standard conventional loan. This makes them more accessible to a wider range of borrowers who may not be able to qualify for that traditional conventional mortgage. And last but not least, the seller can actually contribute to your closing costs. With USDA loans, you can actually negotiate for the seller to contribute to some closing costs, further reducing the upfront financial burden. This is a crucial strategy to discuss during your offer stage because seller contributions are limited to 6% of the sales price and must go towards the closing cost or prepaids. So in this situation, when you're working up an offer, you need to talk to the loan officer and explain, hey, this is my maximum out-of-pocket expense. The loan officer will then have to run everything through automated underwriting to see what reserve requirements are necessary, if it is necessary, and then communicate this to the real estate agent saying, hey, my borrower is only comfortable coming out of pocket with, let's say, $2,000, and let's just say the closing cost is $8,000, so you have to get $6,000 and maybe even a little buffer just in case it takes a little longer for that negotiation to go through. USDA loans also allow you to finance in closing cost into your loan, further reducing the amount of money you need to bring to the closing table. The way that this is typically accomplished is, let's just say you go under contract for $200,000 and the appraisal comes in at $210,000. However, at that $200,000 mark, on the contract that you negotiated, there was no closing cost assistance given. So you would have had to cover that closing cost. With that being said, you could actually finance in up to $10,000 into the loan to buy down the interest rate, pay for the closing cost and prepaid item. So a huge advantage that you don't get with other loans. Even though the USDA is the best choice for many people looking to get rural living, be sure to compare USDA loan rates with conventional loan rates, as well as FHA options, to see the potential interest rate savings and utilize online resources or consult with a USDA approved lender like me for personalized quotes. Now, this will also help you determine which loan options offer the best overall value for your situation. At this point, you should be confident in your choice to go with USDA loans. But if you're still unsure, be sure to check out the link in my description, as I've got videos on every kind of loan for nearly every kind of situation. So if you still want to shop around, be sure to check these out. Now, let's talk about the loan application process. If you need to, grab some coffee or some tea. This starts off simple, but it gets a little more complicated as we go on. First thing we want to do in this process is we want to get qualified, okay? Get pre-qualified by a USDA approved lender. This will give you an estimate as to how much you can borrow and strengthen your offer when you find the right house. Next, we want to confirm that the house you want is in an eligible area. Just because the area you choose to live in is USDA eligible doesn't mean that every home in that area is. So work with a real estate agent that is familiar with USDA loans to streamline the process. They'll know which properties are eligible and how to navigate these specific requirements. Once you find your dream home, it's time to make that offer and negotiate. Submit a competitive offer with the help of your real estate agent. Remember, with USDA loans, you can negotiate for the seller to cover some closing costs. So if you need some help getting your pre-approval letter or pre-qualification letter that's going to actually push your offer across that finish line, click the link in my description and head over to my website, davidzimortgageguy.com. But let's go over some tips to negotiate that rural USDA property. First, you have to understand the market. Research recent sales in your target area. Look for comparable properties that have similar size, location, and features that have sold recently in your area. This will give you a good idea of a fair market value for your offer for that property that you're interested in. Consider USDA loan limitations on the seller. Since the seller may be limited in the potential buyers due to the USDA loan requirement, this can actually influence your negotiation strategies and help you structure a better offer. Your pre-approval gets you into a qualified buyer's pool. So your USDA pre-approval signifies you're a serious and qualified borrower with a secured financing option. This is a really important factor in securing that deal that you want, because once you've got the home and you've reached an agreement with the seller, USDA loans provide more benefits. USDA loans can often close quicker than conventional loans, which can be attractive to sellers who want a smooth transaction. However, you want to be flexible on your terms. So be prepared to offer to cover some or all of the closing costs. This can be especially appealing to the sellers who may be concerned about the extra paperwork or time associated with that USDA loan. So if you can or you're willing to cover part or all of the closing costs, this really shows that seller that you're a well-qualified borrower, and this really goes a long way with your offer. While you shouldn't waive your inspection altogether, be open to negotiating repairs within reason. This shows the sellers that you're realistic and you're willing to compromise. One good strategy is to ask the seller, like when I bought my house, I asked him for all the receipts and work that he's done to the house. This guy was extremely organized, right? So he gave me a journal with everything, all the manuals to the house. And with that being said, I trusted the seller before waiving certain repairs because I didn't want to get caught in a trap. And finally, be sure to focus on values. Rural properties can sometimes have appraisal gaps where the appraisal value falls short of the asking price. So be prepared to discuss how you'll handle the gap if this arises with your real estate agent and your loan officer, because you may offer to cover some or all, or ask the seller just to lower the price to meet that gap. If the property requires repairs or upgrades, use that as leverage to kind of negotiate a lower price or ask for that additional closing cost assistance to lower your out-of-pocket expenses at closing. Before doing anything though, make sure you work with a USDA savvy agent. An experienced real estate agent familiar with USDA loans can definitely be a very valuable asset. They can guide you through the negotiation process, explain specific USDA program nuances, and help you get the best possible deal. As a mortgage loan officer, I've actually had the pleasure of working with agents who know what they're doing and agents who don't. And oftentimes, this can be the determining factor in you securing that offer or not getting it before the next buyer. If you need help getting an agent you can trust, head over to my website, davidzimortgageguide.com, and we can get you in touch with a real estate agent who knows USDA loans. There will also be a link in the description as well. Keep in mind, negotiation always takes time. Be prepared to go back and forth with the seller a few times before reaching that agreement. But by following these tips and leveraging the unique characteristics of a USDA loan, you can increase your chances of successfully negotiating a rural property and USDA loan at a fair price. So now that we've successfully negotiated your contract, here are the next steps. Research USDA approved lenders in your area and compare rates, fees, customer service reviews before choosing one. Now, not all lenders are the same. You have to be sure the lender you choose works best for you, whether that be a bank, retail lender, correspondent, or broker. Brokers are wholesale, and compared to the other options that we just talked about, can certainly save you between $9,400 for most first-time homebuyers and up to $10,400 in savings for minorities, according to 2022 HMDA data. No matter who you choose, be sure to find someone with a strong track record of closing USDA loans efficiently and on time. Next step, once you chose your lender, is the underwriting and approval process. Now, this is where the underwriters and the processors will verify that your income, assets, and liabilities and creditworthiness are there to meet the USDA guidelines. So make sure that you have all of your documentation ready. Nothing slows down the approval process more than you missing a page off of your bank statements or not providing all of your documentation, because it is a really important determining factor when it comes to a loan officer, and especially a guy like me who's looked over hundreds of thousands of pages of documentation. When we see pages that are missing, or we see information that's cut off, or maybe it's zoomed in too much or modified, that's what really holds up the process. And that's when underwriters come back to you asking for additional documentation. It's not that the documentation wasn't provided, it's just that the documentation that was provided was not sufficient with USDA guidelines. Next, we have to order the home inspection and then the appraisal. The home inspection is going to help you identify any issues with the property, and this can actually take us back to the negotiation phase depending on what we find. At this point, you're going to negotiate different repairs that are non-negotiables that you want to get done in advance. Be sure to specify that you want a Class A, Class B, or Class C contractor and not just a handyman doing the work. Having these contractors do the work will ensure the work is done with a quality standard and have a warranty on that work with the provided invoice. The second thing that you can do is with this negotiation phase is that in lieu of the work, you can ask for additional closing costs or negotiate it off of the purchase price. Now, the USDA also requires an appraisal to determine the fair market value of the property. And this is where the appraisal gap that we talked about comes into play. Now, the appraisal isn't going to identify your regular repairs that are needed, and that's what the home inspection does. However, the appraiser is out there to make sure that the value of the property that you're purchasing is fair market value based on other comparables. That's number one. And secondly, they're going to determine if there's any safety, sanitary, or structural issues that do not make this home financeable by USDA. Now that the appraisal is back, we're also going to get title work and we're going to get all of your final conditions. And when everything is approved, you'll be able to close on your loan and officially be a homeowner. Be prepared for closing costs, which can include various fees associated with finalizing the purchase. So I want to tell you why it's important to get all your documents up front. I had a customer named Sean. He was a young entrepreneur in a rural community and he wanted to buy a house. He gets pre-qualified for a USDA loan and we find him a trusted real estate agent in his area because we were able to tell the real estate agent that, hey, Sean is really qualified. All of his documents have been given to us. Once Sean found his home, he was able to negotiate a competitive offer with the seller, contributing all of his closing cost assistance. Now, Sean was really good at providing his documents up front, and not only did we get him pre-approved, but we had his loan pre-underwritten because we knew he had to close really quickly. His real estate agent did a banging job by getting a smooth home inspection quickly, and because of that, we were able to order the appraisal within 2 days of receiving the contract. And ultimately, we got Sean's loan approved and he closed on his dream home in 18 days. That's quick. Lightning fast. Now that we've gone through the process, let's circle back to USDA eligibility. We're gonna go into the numbers now, so let's get ready. Income limits. We mentioned income limits earlier. Now, these are established by USDA and vary based on household size and location and demographics. Now, the USDA website provides a tool to find specific income limits in your area. So it's really important to utilize the USDA income limit calculator to determine your initial eligibility based on your household size and desired location. Let's just say you're a family of 4 living in a rural county in Virginia. Using the USDA income limits, you're going to discover the maximum income limit for a USDA loan in your area is $114,450 per year. This means as long as your household income falls below this limit, you may be eligible for a USDA loan. Remember, income limits are just one piece of the puzzle. We'll discuss other factors like debt to income ratio, credit score, and explore strategies to improve your eligibility if you fall on that borderline. Next thing to consider is your DTI, which is your debt to income ratio. This compares your total monthly payments, that includes your housing payments, any additional installment loans such as car loans, student loans, revolving accounts such as credit card payments, and etc., to your gross monthly income. The USDA actually has a standard guideline of 43 on the debt to income ratio. However, this is really going to vary from borrower to borrower and different scenarios. And with stronger files, it can go up to as high as 50. And on some of the files that may need a little bit of assistance, it could be lower than that 43 threshold. So it's really important to calculate your debt to income ratio by adding up all of your monthly obligations and dividing that number by your gross monthly income. Now, there are online calculators and financial tools available to help you with this. However, if you head over to davidzimortgageguy.com, we do have a qualification calculator as well. And why this is really important is when you're working with a well-seasoned loan officer, they can not only look at your current debt to income ratio, but they can also look and say, hey, you know what? If we get additional cost or closing costs from the seller, we may be able to take some of this money that you have allotted for closing costs and use it to pay down some of your debt, in turn, making your debt to income ratio lower so that you qualify for a higher sales price. So now that we've finished with debt to income ratio, let's talk about credit score. While USDA offers more flexibility than conventional loans, maintaining that good credit score is still important. A score above 640 generally improves your chances of approval and can lead to a more favorable loan term, which means lower interest rates. So keep in mind, you can have a credit score as low as 600 to start looking at the qualification for a USDA loan. And be sure to obtain a free credit report from annualcreditreport.com and review it for any errors. You can also dispute any inaccuracies to improve your credit score through annualcreditreport.com. Since you've made it this far in this video, I'm going to give you a very high-level tip. If you start your process earlier, this is actually going to be better, right? So game planning is really important. If you go to the loan officer and you have a 580 or 600 credit score, you've gone into annualcreditreport.com, you've disputed accounts that are not yours or really old accounts or even medical accounts that should not actually be on your credit report, you can actually get qualified up front. And while you're working on your credit, if things are done fast enough before closing, I would certainly address this with your loan officer and say, hey, if I do these things during the process and pay these bills down, will you or can you do a credit rescore right before closing so that I can get a better interest rate? So whenever we lock in a loan, keep this in mind. We're locking in a loan on the day's interest rate. So if I locked in a loan today and 20 days later, we go back and the credit score is improved by 40 points, at that point, I could actually go back to today's rate sheet and say, we locked in at a 7% rate with zero cost. And now that this credit score is increased, we can actually close at 6.625 at zero cost. And because of that credit score increase, there is potential savings that can even go into the thousands of dollars. Remember, these are just some of the key factors influencing USDA loan eligibility. So if you're ready to discuss your eligibility in more detail, get in contact with me on my website at davidzimortgageguy.com or click the link in the description. Now, let's talk about maximizing your savings. Remember the appraisal gap? Sometimes the appraised value of the home might be higher than the purchase price. In some cases, with a USDA loan, you can use the difference, which is called the gap, towards closing costs. This is a very valuable strategy to manage your upfront expenses. If the appraisal comes in higher, that's always great. But what happens if the appraisal comes in lower? In this potential appraisal gap scenario with your USDA loan, you have to talk to your lender and develop a strategy to address a potential gap that comes in lower and how to utilize some of those funds from the additional closing cost to your best advantage. So whether it is to buy down the interest rate, home warranties for multiple years, or banking that equity, it is best to talk to your loan officer about how to best utilize these funds so that we can guarantee, or you can guarantee, a successful closing. Next thing to look for is USDA grant programs. The USDA offers various grant programs, and so does your city and county. And these are actually there to assist eligible home buyers with down payment and closing costs. These programs can be particularly helpful for low and moderate income families. So it's really important to do your research upfront on USDA grant programs, as well as your local and state level grants, and consult with your USDA approved lender or visit the USDA website for more details on these programs. Check in with your local housing agencies and state resources in your area, because a lot of them do have grant programs that they don't advertise. However, they do have some income limitations. But by understanding what the area median income is going to help you determine if you qualify for these USDA grants. All right, you've made it this far in this video, and you should feel very confident about your ability to qualify or to meet the qualifications for your USDA loan. If you're ready to take it to the next step, get in contact with me by using the link in the description, or head over to my website, davidzimortgageguy.com, where my team and I will be happy to help you get started on your application. So if you're unsure, remember, I've got video breakdowns on every loan and how to use them in nearly every situation. If there's anything we've gone over today that you're not clear on, leave a comment. I actually may do a whole video on that topic. I hope you enjoyed this video and want to continue to explore the full potentials of a USDA loan. But before you go, let's go over some things to remember before you apply and some budgeting tips that'll get you on your way. So here are some things I want you to consider before applying for your loan. Property inspection. Rural properties may have a different consideration compared to urban areas. Factor in potential well and septic systems alongside the standard home inspection. If you're buying a single wide or double wide or even a triple wide, you may need to get an engineering certificate if there's not one that's already been issued on the property with the previous sellers. These additional inspections can help identify any potential issues before finalizing your purchase. A survey is also recommended if there's a need to put in a fence, or you need to know where your property lines are, or a fence is already on the site just in case your neighbor doesn't like it and wants you to move it. Internet and utilities. Reliable internet access is crucial nowadays. Research internet availability and service providers in your desired rural location, and don't be surprised if options are more limited compared to your urban areas. Factor in potential internet service costs when budgeting for your rural home. Now, next thing to really consider that's really important to me is the proximity to amenities. Evaluate your needs and lifestyle. Consider the distance to grocery stores, healthcare facilities, entertainment options, in rural settings. Rural living offers a unique charm, but it may require adjustments compared to urban conveniences. It's important to schedule a comprehensive home inspection and include your well and septic system checks the same day, and allot for at least 4 hours to make sure you're there with the home inspector as well as the well and septic inspector for your chosen rural property. So just like good internet access may be more costly than in the city, there's going to be ongoing cost of rural living that you have to budget for. For example, rural properties can come with more regular maintenance costs compared to your urban home or your downtown apartment. So factor in potential upkeep costs for landscaping, septic systems, and your well. It's not all bad though. Due to the extra space, you can invest in infrastructure that can reduce your monthly expenses, especially if you've got a green thumb. With that being said, unforeseen expenses like higher fuel costs, unexpected commuting times, and making up for those limited amenities can take some getting used to. Be sure to really get to know your area before you move and plan for these possibilities in your budget. So, in my description, if you haven't seen it already, I have a video on how you can use your USDA loan to buy a manufactured home, a fantastic option for affordability and flexibility in a rural setting. This is a great option for first-time home buyers and maybe your key to home ownership. If the idea of customizing your dream home sounds appealing, I'll also have a guide to using your USDA loan to build your dream home in the perfect rural location. Be sure to check these out because these options are vital if you're considering a USDA loan. Owning a home in a rural setting can be a dream come true, offering peace, tranquility, and a strong sense of community. With a USDA loan, achieving that dream can be more accessible than ever. Remember, the key is to plan, research, and leverage the resources available to you. So, take the first step by contacting a USDA-approved lender to discuss your eligibility and explore your USDA loan options. I'd be honored to help you on this journey. So, if you're ready to get started, get in contact with me by using the link in the description below. With the right guidance and preparation, you'll be able to secure a USDA loan and be on your way to home ownership, financial stability for many years to come. Thank you for watching this video. I'm David Zai, Mortgage Guy, and I'm out.